This video is to be used for educational purposes only and is not intended to replace individual research or licensed investment advice. Unique experiences and past performance does not guarantee future results. Trading stocks, options, and spot currencies involves substantial risk, and there's always the potential for loss. Your trading results may vary. No representations are being made that any software or training will guarantee profits or not result in losses from trading. This is the JDfn Forex Report.
Good afternoon, traders. Scott Norris here, wrapping up the week on Friday, September 12th, 2008. Well, the dollar put up another good fight early this week, but stumbled in the final 24 hours of trading. Just before yesterday's close, we saw speculators drive the dollar sharply lower. The selling then picked up in late-night trading, and the buck did not recover at all until early this morning. The greenback looked a little healthier just before the August PPI and retail sales numbers crossed the wires. We did like the fact that producer prices were down, but there was no way to put a positive spin on retail sales. The headline figure declined by 0.3%, while ex-auto sales dropped 0.7%. Ironically, the dollar tried to rally after only seeing a 1-minute knee-jerk reaction. The rally was also short-lived, however, and the greenback eventually began to push lower. The pound and euro really covered some ground against the buck, while the commodity currencies lagged a bit before trying to catch up. The dollar was able to hold up much better against the low-yielding franc and yen. This week's price action confirms our skepticism that the dollar is running out of breath. However, we are still of the belief that the corrections will be relatively small, and the buck does have more room to run in coming weeks and months. In the meantime, such strong daily closing prices on currency pairs like the pound dollar today tell us that another bout of dollar weakness is a good possibility early next week. It may not come immediately on Sunday night, but we should watch for it within the first 24 or 48 hours of trading. The economic calendar for next week does consist of some top-tier data, along with a Fed rate decision. These reports will play a factor. We hope that this week's choppy conditions will fade, and outside of news events, the markets will be a bit more stable. For that, we can only wait and see. Now to the big picture. More disturbing news in the U.S. financial market came upon us this week as Lehman Brothers announced it's for sale. Of course, this is not your typical sale, but rather the result of undercapitalization. Similar to the collapse of Bear Stearns, the Fed is now trying to help facilitate a takeover. Such government intervention may not sit well with foreign investors, especially since last weekend the Treasury announced it would bail out Fannie and Freddie. Investors from other countries who own dollar-denominated assets must be growing concerned about how stable our banking system really is. In addition to the instability, the government is essentially nationalizing bad debt to help alleviate the shocks. Finally, this week we saw another jump in the trade deficit, which may have reminded traders of the structural problems that helped push the greenback lower from 01 to 07. This looks a little like a recipe for disaster in terms of underlying fundamentals. Luckily for the dollar, the rest of the world is such a mess that traders have been sweeping it all under the carpet. Let's just hope we can get our act together before the rest of the world gets back on their feet, or the greenback may come under heavy fire. Until next week, have an excellent weekend. Take care.